Welcome to Financially Speaking, brought to you by Buska Retirement Solutions and its affiliate firms. We offer retirement, tax, and legacy planning from a dedicated family-built team. Today, we'll discuss provisions from the Big Beautiful Bill, new rules about taxes on tips, and the new Trump accounts for childhood savings, and AI-powered scams. And now for our weekly question and answer segment.
Welcome back to Financially Speaking. I'm here with Cole Bruner and Ryan Pekka from Buska Retirement Solutions to discuss provisions from the Big Beautiful Bill, new rules about taxes on tips, and new Trump accounts for childhood savings. Gentlemen, thanks for helping us dissect this thing a little bit. And looking at it for what most of us care about is what's in it for me.
Right. Right. Isn't that what everybody wants to know always about everything?
Generally speaking, yes. What exactly is a Trump account, and how does it differ from other savings vehicles that might be out there?
Absolutely. So it essentially starts out as a child savings account, but it essentially turns into an IRA once they turn 18. Biggest difference between your already existing ones like a 529 or an UTMA or an UGMA is that it's going to be essentially just for that retirement focus. You can still use it for a first-time home purchase or education purposes. But other than that, you've got to wait till you're 59 and a half to touch any of it without a penalty. So the biggest difference there as well is you get that free bonus money for newborns for the next 3 years. So from January 1st of 2025 to December 31st of 2028, the government's going to chip them in $1,000 towards that account, and that kind of jumpstarts them.
Only for newborns.
Mm-hmm. Correct.
Okay.
So if you're thinking about having a new child, now's the time.
I don't know if the 1,000 is a trade-off financially, but
it's not enough
I
to
don't know
sweeten
that
the pot.
covers it, but who can contribute to it? So obviously the infant can't. So who can contribute to it? How much? And are there limitations to it?
There's a variety of different people that can contribute to these various different accounts. I mean, I think there are some guidelines in terms of kind of how you can contribute to them. And then like Ryan had mentioned, there's the extra, kind of bonus that the government kicks in for the next couple of years. But it's a way of allowing for various different people, especially loved ones, the people that are probably most likely to contribute, right. Grandparents, parents, those types of things, other family members, maybe aunts, uncles, those types of things. So it does allow for a pretty wide variety of people to be able to contribute to these types of accounts.
And you mentioned that at age 18, it converts or acts like an IRA. Does it actually convert to an IRA?
That's the way the wording is right now. There's still some clarity, but from what it states is it essentially converts from this Trump account into a traditional IRA. So you can still have some of these. So if you have a 16-year-old who's bringing in income, or even if you've got a 12-year-old who's mowing lawns and reporting income to the government, they can still have the traditional IRA or Roth IRA before this, or in accordance with this as well. So they don't have to be kind of standalones. You can't have one or the other. Mm-hmm. Biggest difference is now it's who's contributing to it, what are the rules around it, and this new Trump account, your employer can contribute to your child as well. It's a $2,500 limit on that one, so about half of the yearly limit you have, and it does count, so you can't put $5,000 and get extra from your employer, so to speak. But it opens up some different avenues, and hopefully for some people, some new benefits at work.
Yeah, absolutely.
And what are the limitations to it? Are there investment fees in it? Is it held by the government? Like how does it work from that standpoint?
Biggest limitation is they want simple investments. So they want ETFs or mutual funds that track major indexes, your S&P 500, NASDAQ.
We're not putting crypto in there?
I don't think they've allowed that one yet. We'll see. Give it a few years. Maybe we'll find out. And then very low cost. So 10 basis points, so 0.1% is the maximum expense ratio that that indexed account can have. So it's meant to follow these broad indexes, growth orientated, but low cost. So all things we preach already.
Right.
So we appreciate that they're looking out for them on the other side, basically trying to prevent bad actors, people who are trying to sell you commission-based products, things like that.
Try to sell 3-year-old high commission products or something?
Yeah,
absolutely.
How does it, is it held by a custodian? Where does one get one of these things or open one of these things? How does it work? Or do we not know yet?
It's still in process.
Okay.
I mean, technically, these aren't going to be able to be contributed to until next year, I believe 2026 is kind of the way that it's playing out right now. So as with many big law changes, there's yet to be some specific details to come out on some of those types of things. But as of right now, it's not even something that we can really participate in until next year anyways.
Got it. So just kind of things on the lookout for how to save. How many people do you see, clients you have that do start saving money for their grandkids or grandkids' college? And I'm talking from the retiree, 16 above.
Yeah.
Do you see a lot of that right now?
I would say we do see a pretty fair share of that. It is kind of that thing that a lot of grandparents want to be able to do when they've got a new grandbaby, is kind of start them off for success in the future. And of course, there's a variety of different tools that you can use, 529 plans, like Ryan had said, UTMAs, UGMAs, those are different various investment types of accounts that you can open for these people depending on what restrictions you want related to that. Like a 529 is going to be more primarily for that higher education expense, although the 529 could be appealing because you do have that ability to kind of over time flip the money over to a Roth IRA if the child doesn't use it in the future for education expenses. Historically, UTMAs have been really popular for clients that just want to be able to contribute something for their grandchildren for the future, or even children, and don't want it specifically carved out just for educational expenses. Maybe they want to, buy a house, or they want to, start a business or something along those lines. And those are areas where a UTMA could get a little bit more flexibility for them, but it doesn't have that benefit of being able to potentially flip it over into a Roth IRA, where the 529 could potentially provide some nice advantage to be able to do that in the future. But there are limitations on that too. Right. Annual contribution limits in addition to the lifetime maximum, which right now is $35,000 that you can move from 529
just
to
gets too
Roth.
much.
Yeah, exactly.
And do you see a lot of interest in the college savings accounts? You mentioned 529. Is that a broad thing for people to use?
Yeah, it kind of depends. I mean, people have different goals with those funds, those universal transfer of assets to minors. It's once they're 21, they can use it for anything. Sure. So people kind of are a little bit more hesitant about those in certain circumstances. 529s being very specific to education. It depends on what your purpose is now. Again, these new accounts are really just a retirement account that you can start much younger for them. So there's benefits to each different type of account. It's just kind of what you're trying to use it for. This one, you still can use certain covered expenses that would be similar to a 529. It's just not it's not exactly line for line the same. And there's some different tax advantages. 529s can be deductible in the state of Wisconsin, where this Trump account, none of your contributions are deductible on a state or federal level. Right.
So it's just helping children save and get some money behind them. So
yeah.
All right. Well, I can respect that.
Yeah.
Well, thanks for helping us unpack that. I mean, that is a cool thing that if you have a baby, you do get $1,000. Might be reason we
doesn't
have
hurt.
one. But if I'm going to have one, thousands of thousands, right?
Right.
Thanks for helping us, guys. Well, let's come back after the break and dig a little more into it. And then we'll explore the new rules about taxes on tipped income, which is a big thing for people. So stay tuned. See you after the break.
Do you have a plan for how your assets will be handled after you're gone? Without one, the state could end up making life's most important decisions for your family. Through our partnership with Estate Guru, we make estate planning process simple and affordable, offering wills, powers of attorney, and revocable trusts. On average, our service costs 70% less than the traditional estate attorney fees, and you may even qualify for free financial and healthcare power of attorneys. Call our office today to get started.
And now back to our weekly question and answer segment.
Before the break, we explained what Trump accounts are and how they launched childhood savings. Now let's switch gears, talk about tax on tipped income in the guise of people, pursuing a second career in life after retirement. So are you guys seeing, before we get into the tipped income specifically, what are you seeing people do when they retire from that job they've been at? They've been the person that people go to and rely on. And I always hear that that's one of the hardest things for people to miss on, or to miss about their life. What are you seeing people do with that second phase of their life?
Well, I think it kind of boils down to having the free time to do something that you might be more passionate about
Yeah.
now. You know, I mean, we all have the career, you know, and we get through that career and that 40 plus hours a week. And, you know, that's been our blood, sweat, and tears for how long now? And then we get to the point in life where we don't need the salary per se from that anymore.
Yeah.
Because maybe we've done our financial planning, we've put all of our stuff in line, and we've got a good plan together, but we still desire to have some sort of community impact.
Meaning or something. Yeah.
Yes, exactly. Something that gives us, you know, the ability to get out of the house and go do something that maybe not only gives us some social benefits, but also a little bit of financial benefit. I mean, let's face it, if we're still working in some capacity, unless it's volunteer work, we're still getting paid in some capacity. And granted, we're probably getting paid a lot less than what we made before.
Which is great. Less responsibility maybe too.
Exactly. Less stress, less, you know, all that, less taking work home with you at the end of the day, all that kind of stuff. And so, I mean, I think it allows people to kind of take a step back and think about, what do I want to spend my time on? What are the things that I am passionate about doing? And maybe that be, you know, picking up some sort of, you know, 20 hour per week job, you know, doing something that just gets us out and talking with people and whatever it might be. And I mean, we've seen a ton of different examples of, you know, people going and getting more involved in their church office, or, you know, people going and picking up a part-time job at a bar or restaurant, or, you know, picking up a new passion project that, you know, maybe they've been curious about for their, you know, career, but now have the ability to devote the time necessary to, you know, delving further into this new career potential or new business venture or whatever it might be. So, I mean, we see all sorts of different things, but I think it really comes down to having something to fill your time and something that allows you to still have a drive.
Right.
You know, because we do sometimes see people that come in. You know, I had a client a couple of months ago that came in and she was almost in tears because she's like, I just don't know what to do with myself anymore.
Right.
And I know I don't want to sit at home every day.
It was fun for 6 months. And now what do I do?
Exactly. So I think it just kind of comes back to, in terms of your retirement planning, thinking about not only what retirement is going to look like and are you going to be able to afford to retire, but what are you going to do with your free time to maintain that drive, that passion for life, that ability to get out and still use your mind and keep yourself sharp and keep yourself socially acclimated.
Keep yourself sharp, keep yourself physically active, whatnot.
Yeah.
Now, some of these things will lead into tips, so it's good we're going to talk about. This might be a major part of their income. So when you're claiming your tips, how is the tip no tax on tips provision in that big beautiful bill? What does that actually mean?
So let's start with the big part of it. So you can deduct up to $25,000 in tips. Those mean you have to claim those tips.
Which everybody is.
Yep, everyone I've ever met has.
Absolutely.
You know, so that's a big part. The other part is they have to be voluntary tips. So they can't be like service charges or things like that. And you have to fall under these categories. I think there's something like 72 jobs they said are traditionally tipped. So your classic restaurant style jobs, your taxi drivers and kind of service.
Tipping.
But also entertainment. You know, I think there's online entertainers is a special category, and you know, if you're a dealer at a casino, those are tipped professionals. You have to fall under these certain categories. I can't all of a sudden start taking tips for compensation instead. So they've kind of
no one tips their financial advisor.
Yes,
right?
Sadly not.
It has to be cash is the other part. So if you get, you know, tickets to a sports event or something like that, you can't write those off, so to speak. And then the other side of it is there's a cap on how much money you can make. So it's modified adjusted gross income for an individual of $150,000 or $300,000. So those are kind of the big parameters. But essentially, it's not an exemption on that earned income. You still pay your Medicare and Social Security, but now you're not paying that federal income tax on it. So it's saving you, you know, anywhere from 10 to 22%. You know, sometimes a little bit more if you fall into the right category.
Which is great. And we talked about, you know, made a joke about claiming versus not claiming, but do you guys have to have seen people who make large amounts of tips and not claiming them, that runs into other financial issues in their life, doesn't it?
Oh, yeah.
Doesn't it affect loans and that kind of thing too?
Well, and not only that, and it goes beyond just tipped employees too. I mean, I think about farmers, you know, I mean, obviously in our area, we've dealt with a lot of farmers over the years.
Yeah.
And how many farmers have bought themselves a very expensive piece of equipment to reduce their income versus maybe investing into a simple IRA or a SEP IRA, which is going to give them a similar deduction in taxes, but it's going to set themselves up for future success versus a depreciating asset.
Right.
And so I can't tell you how many situations we've dealt with clients that were not claiming all of their income, business owners that are hiding income through their tax return, farmers that are investing in their property. Exactly. And shuffling things around so it doesn't show up on their tax return, which sounds great today, right? If I have the choice of paying zero tax or $10,000 in taxes, I would really be inclined to take the zero option also.
Right.
But all of a sudden, they get to 62 years old and they want to retire and they're only getting $500 a month in Social Security.
Because you didn't make any money.
Exactly.
All right.
Right? So there's pros and cons to everything in life. And a lot of times the people that are helping you to figure out how to shuffle the things around in your tax return are not the people that are going to be there to turn to when you get to 62 and you can't afford to retire because you hit all your income and it looked like you made no money over the years.
You didn't ask me that question. Yes,
exactly.
How to minimize your taxes.
Right, exactly. Those are two very different topics, but are very much related to your long-term retirement success.
So maybe some good comes out of that then. If you're not getting taxed on, you report them, and even more so than getting them back, you get something from there.
Absolutely.
Does that $25,000 cap, are there phase-out thresholds if you're middle income? Like, how does that work?
Yeah, so the two biggest areas that are not going to see a benefit are people who are working incredibly part-time and already below that threshold, where they're pretty much not paying federal taxes. Or
you got one shift a month.
Right. Yep. They're not getting a whole lot from it. Then
right.
The other side of it is, say you're a very high income earner and you just work at the bar, or you own a bar and work at it on the side.
Right.
Now you're over that $150,000 if you're a single individual, or $300,000 in joint income after you adjust it as a gross income. You get phased out then. So there are limits on it. It's not meant to be, if I decide, hey, I now want to go have a second job to pay for all of my vacations and not pay taxes on it.
Tax-free income.
Yes.
Tips aren't there. So there are some limits, and people it's going to benefit more. Your middle earners are going to be the best kind of
ones who are really in a service role, who are getting tips
it's
for the right reasons.
Essentially, it's their full-time job, and that's really what they're doing.
Yep.
That's fair. Even with the new deduction, are there taxes on tips that workers will still owe? Is there some, what is the gotcha here? Is there one?
Yeah, so you're still paying Social Security and Medicare taxes. So you're still paying those FICA taxes.
Which again, you get back later, so that's probably a good thing.
Well, yes, through the form of having Medicare when you retire and having a Social Security payment. Yes, absolutely.
Yes.
Mm-hmm.
But those are really it. I mean, the biggest thing is you're just not paying that income tax on that portion of your income. So it's still a pretty big benefit. That's a majority of it. But if you're a self-employed individual, you're still paying both sides of those. So it's a limitation on it. And it's meant to I think it's partially meant to encourage you to claim those tips.
Right.
Because that's a big incentive behind it that's not said out loud. But the other side of it is just making sure that you're still paying into these benefits, because otherwise you don't see that on the other end either.
Yep.
Okay. One last question.
Yeah.
Not scripted.
Mm-hmm.
What's your after retirement job? With no responsibility, little responsibility, and just free time. Ever thought about it?
I think, that's a tough one. I guess, I never really thought about it. Yeah, I guess in this business though, it's a little different, Brian, because we're never at a point where we have to be done.
Yeah.
Like, I guess the financial world is kind of different, where we can kind of slowly back away and pick and choose, like, we still want to work with, clients in certain areas of the business and things like that. So I think it's a little different for us, where we can kind of say, well, maybe I don't want to do all of this stuff related to my role anymore, and I want to just focus on these ones over here.
Okay.
So I don't think I have one.
You don't have a specific thing?
I already did the bartending and serving. I'm good. I'm good on those.
Fair enough. Fair enough.
Long enough.
Well, thanks, guys. It is a good thing. And so those of you that might make tips, maybe you have some grandkids or kids who are making tips, all good information to have. We appreciate you guys joining us. Thanks for tuning in today.
At Buska, our goal is to streamline the retirement planning process to help you move towards a successful retirement with confidence and ease. Through our 3 companies, we provide a comprehensive approach to planning your future. We work closely with you to create a personalized, comprehensive retirement plan that reflects your unique goals and financial situation. Our team integrates investment management, income planning, tax strategies, estate planning, health insurance, and Medicare planning all under one roof. That means fewer appointments, less stress, and more clarity as you prepare for life's next chapter. Whether you're just starting to think about retirement or looking for a second opinion on your current plan, we're here to help you feel more confident about your financial future. Call us today at 715-355-4445 or visit retirewithbuska.com to schedule your complimentary, no-obligation consultation. Let's make retirement planning easier together.
And now our Financially Speaking weekly desk segment.
Welcome back to Financially Speaking. I'm Cole Bruner from Buska Retirement Solutions, here with my sister Kaylee Berenson. Today we're talking about a hot topic, AI-powered scams.
That's right. Scams are nothing new, and you can go all the way back to ancient Egypt to find examples where merchants were using hollowed-out weights to cheat their customers. But AI is making it a little bit easier for scammers to target and deceive innocent people.
And the numbers really don't lie. Reports show that $200 million was lost to AI scammers in just the first 3 months of 2025.
And there's also an entire array of AI scams out there. I mean, I admire the creativity of these people if they weren't so evil. But which type of scams are we going to be talking about today?
Well, let's talk about job search scams. The interesting thing is that job search scams are running both ways.
And what do you mean by that, Cole?
Well, some people are using AI to pose as fake job seekers to land remote jobs and then funnel US currency into places like North Korea.
Well, that's just crazy. I mean, I wonder how many people are missing out on good remote job opportunities because of that.
Right? But what's even worse and possibly more relevant to our viewers is the fake AI job offers.
Well, those can be brutal. So why don't you tell us a little bit about how that works?
Well, here's a quick example. A woman in Tucson who is named Marie told her local news station that after getting laid off from her job, she received what looked like a legitimate offer for a new job. It appeared to come from Farmers Insurance, and it looked real.
But it wasn't?
Right. And during the so-called interview, Marie noticed some red flags. First, they invited her to an interview that they conducted over Microsoft Teams, but they used chat and not video.
That seems strange. Interviewers, they usually want to see and hear the person that they're interviewing.
Exactly. Then Marie noticed that the interviewer was a top executive, a COO.
Also, red flag. I mean, people from the C-suite don't usually conduct interviews unless, it's a final round or something. But good on Marie for spotting that. So what happened next?
Well, the interviewers told Marie that they were going to send her a laptop, and they asked her to send them a check to cover the cost of the time clock they were going to put on it.
Another red flag.
They also told her to sign in the next day for more instructions. But Marie realized they were probably trying to rip her off, and so she dropped the whole thing.
Well, I'm so happy for Marie right now.
Me too, but I'm also angry. The last thing job seekers need is someone trying to take their money, especially if they're out of work and on a limited budget already.
And that's a great point. I mean, the whole thing is infuriating. So what did Farmers Insurance have to say about all this?
Well, Farmers Insurance said they're aware of the scammers and they encourage candidates to be vigilant. If you're looking for a job, make sure you're going through a company's official channels.
So you want to be sure that you apply on their website and not through some random portal. And you want to be very wary of email job offers that look too good to be true.
Right, and the hard part is that AI is making these scams look more convincing. You used to be able to rely on telltale things like typos or weird grammar to know that a phishing message came from an unscrupulous source. But now, with AI, these same scammers can generate a message using tools like ChatGPT and produce something that's error-free.
And they can also use AI to create a message that sounds like it came from a certain company. They use AI to copy that company's branding style, and then they make their fake messages seem more convincing.
That's right.
Well, what can people do if scammers are better at hiding their tracks?
As you said a moment ago, one thing that you can do is check the company's website. Is there an actual job listed there? If not, it's likely that a scammer is targeting you. Second, if the offer is for an easy job that comes with a high salary, it might be a scam. And third, be wary of anyone who asks for money.
Well, some employers do ask employees to cover the cost of things like uniforms or other equipment.
Well, in my opinion, you shouldn't pay for that uniform unless you're standing in someone's office and have filled out your tax forms. If someone says you need to buy a uniform and sends you a link over Microsoft Teams, I'd say do not put your credit card information into that form.
That sounds reasonable to me, and I'd also pay attention to where the emails are coming from. If somebody emails you from a Gmail or a Yahoo account, it's probably not someone really from a legitimate company. And if somebody starts to ask you personal information before they start a job interview, that's also a red flag.
Those are great points, Kaylee. According to the Federal Trade Commission, fake job scams have tripled since 2020 and cost job seekers $750 million in just 1 year.
Well, that's really scary. I mean, I hope that this segment helps to protect a few people and, others, their families, from scammers.
Absolutely, I hope so too, because we're out of time. But viewers, if you have concerns about protecting yourself from scammers, visit us at retirewithbuska.com or give us a call at 715-355-4445. We'll be right back with more of Financially Speaking after this.
If you're 59 and a half or have recently changed jobs, now might be the perfect time to consider a 401k rollover. Rolling over your old 401ks could simplify your finances and give you more control from investment options and costs to how and when you make withdrawals. A rollover could give you the opportunity to partner with a financial services professional and tailor your investments to your specific needs, not the company's group plan. Call our office today to schedule your complimentary consultation and see if a 401k rollover is right for you.
With recent market changes, it's understandable that some people are feeling a little anxious about their financial future. That's why now might be a perfect time to review your financial plan. A financial services professional is trained to help you stay focused on the facts, not emotions, when it comes to your strategy. Getting a second opinion today works to ensure your investments are properly positioned to weather market volatility and that you're not taking on more risk than you realize. Let's work to make sure your plan is ready for whatever comes next. Call us today to schedule a complimentary review with one of our financial professionals.
Thank you for tuning in to this week's edition of Financially Speaking. We're glad that you were able to join us today, and we hope that you learned some useful retirement tips along the way.
On today's show, we covered a number of important topics, and hopefully we did so in a manner that was easy for you to understand. This is the same way that we communicate to our clients when we meet with them in person. Remember, with the help of the right financial services professional, you can create a quality retirement, and our team is here to help. Right now may be a great time to get a second opinion on your retirement plan, so call us at 715-355-4445 or go to retirewithbuska.com to continue your retirement education, catch up on some previous episodes of our TV and radio show, or schedule your complimentary, no-obligation consultation.
If you have any questions or comments about today's show, call us at 715-355-4445 or feel free to send us an email at info@retirewithbuska.com. Join us next week at the same time in the same place for another episode of Financially Speaking.